Greg Parker, also known as Big Business, has been indicted by the federal government for allegedly running a multi-million-dollar Ponzi scheme. Let's go.
This is Pocket Watching with JT.
Hey, Pocket Watchers, I am certified financial planner Jayson Thornton, and this is the Fraud Fumble. This is where I react to the financial failures of your favorite celebrities and influencers so you can get the financial lesson without going through the trouble. Let's go, Pocket Watching. On this episode, I will be reacting to the federal government's case against Greg Parker, claiming he ran a multi-million-dollar real estate Ponzi scheme. Now, before I dig into the numbers, let's try to give this brother his flowers. Greg Parker claims to be a self-made millionaire and real estate mogul. On his social media, he showed off a lavish lifestyle, flying around on private jets, driving fancy luxury cars, and living in mansions. All of the things that average people believe are signs of extreme wealth. But not only did he keep it to his own social media, he found his way on the big urban finance podcast. Yes. He ended up on all of these podcasts that actually reinforced the idea that this man was a self-made millionaire who came from the hard streets, who did all of the usual things that we think of dealing drugs, having a bad background, but then was able to find a legitimate way to use all of his street business knowledge and turned it into a legitimate business. So that reinforced the idea that this was the man to learn how to build wealth legitimately through real estate. Now, he was able to do all of this, claiming that his business model was basically he would teach people for a fee how to become real estate investors. But not only that, he would also provide the opportunity to rehab those units and even be the property manager, collecting the rent for the investor so that they can simply sit back and collect their money in the mail. So the question we have to ask ourselves here is, how does he end up on Pocket Watching with JT? How does he end up on the Fraud Fumble? Well, according to the federal government, on April the 29th, 2026, Greg Parker and his wife Danielle Parker were both indicted. On what charges? Well, according to the paperwork, he has been charged with conspiracy to commit wire fraud and wire fraud. Now, the U.S. District Court, Northern District of Ohio, are claiming a lot of things here. They are claiming that 59 investors alone he owes over $1 million to. That's just a drop in the bucket of all the people who he was able to bring into this scheme, according to the federal government. But just 59 investors he owes $1 million to. Okay, what does the federal government claim that the Parkers did? Well, they're claiming that the Parkers operated a classic Ponzi scheme from 2017 through 2023. They allege that they induced victims to pay small fees like $2,000 or $5,000. Let me be clear. $2,000 and $5,000 for mentorship is not a small fee for the average person. But when we talk about the next thing, you will understand why I say small. So the whole claim from the government is that they would introduce the victims into the overall scheme by first charging them between $2,000 to $5,000 for mentorship, right? He's going to mentor you to be a multi-millionaire real estate professional for the low price of $2,000 or $5,000. Then, After you got into the mentorship, the next level is now I am going to bring you into investments. And now this would cost tens of thousands of dollars. The government claims that instead of buying and renovating properties for his investors that the United States government are calling victims, he allegedly used that money for his lavish lifestyle, and he would then use new investors' money to pay back the old investors. Classic Ponzi scheme. So, now, for full disclosure, this is not new to the day one pocket watchers. If you have been subscribed to this channel, you are very well aware that years ago, I covered the allegations of Greg Big Business Parker running a multi-million-dollar Ponzi scheme. I want to give a big shout out to Tony the Closer and Eli from What Happened to Common Sense years ago, about 2 or 3 years ago. They brought this story to my attention, and we did a few videos covering this topic. Now, you can find this video on the Throwback channel on Pocket Watcher Classics. Just type in Pocket Watcher Classics. The Throwback channel will pop up, and you'll be able to see that old video. But let's bring it up to today. How did the scheme work? According to the federal government, we want to know how this man who claimed to be a self-made millionaire, who claimed to be a real estate mogul, how was he able to bring in millions of dollars in this scheme? Now, before we go over that, for my viewers on YouTube, do me a favor. If you're listening to this podcast in the background, I want you to take a look at the screen just for a moment right now, because it's very important. What you will see is the promotional picture of Greg Parker. Okay? Now, I want you to focus on something. You will see that he is wearing a suit jacket, right? Looking, I guess, somewhat professional. I guess that's what he's trying to do. He's trying to look somewhat professional in this picture. Now, understand, this is the picture that would be found on his own social media, on his promotional material, on his websites. This is the picture that he decided to use. I want to point out a red flag. What is the red flag, JT? I want you to take a look at the man's wrist. What you will see on one of his wrists is the removable tag of the suit jacket. Now, for all of the brothers out there who has ever worn a suit or bought a new suit, you are aware that that tag comes on the suit when you first buy it. You are supposed to remove that tag. Okay, it's not supposed to stay on your wrist. You're supposed to remove that tag. So all the people who have never worn suits before, see, there's little things about a suit when you get it brand new. That tag is normally on your wrist. You're supposed to take that off. Not only that, I can bet money that if you were to lift the little flap over the pockets of that suit jacket, I can probably bet that the pocket is sewn together closed. Why? Because that's how new suit jackets come. Okay, you're supposed to take that tag, take the tag off of your wrist, and you're supposed to, get a razor or some scissors or something, and you cut open the pockets of the jacket. That's how it comes new. You're supposed to take those things off. The reason why I point that out is, how could you ever, for a moment, give thousands of dollars, tens of thousands of dollars, or even millions of dollars to a man who doesn't even know how to properly wear a suit? He is unaware that that tag is not supposed to be there. But okay, let's get into the real pocket watching. All right, let's take a look at this. This is what the federal government is claiming. This is the Greg Parker real estate Ponzi scheme as told by the U.S. government. Now, Greg Parker promoted himself as a self-made millionaire and real estate mogul using the big business brand on social media. He would project his extreme wealth, showing himself and his wife, can't forget the wife, in private jets, Mercedes Maybachs, Lamborghinis, and just living a lavish lifestyle. He would then get potential victims funneled through in-person and online seminars with titles like Rolling with the Parkers, Year of the Millionaire Tour, and the Road to Financial Freedom. Once again, you would pay anywhere between $2,000 to $5,000 for the mentorship. But then after you got into the mentorship, you are now qualified to receive the one-on-one guidance and the exclusive Cleveland real estate deals that he was able to give to his mentees. All right, now what was promised in this? Well, according to the federal government, victims were told that the Parkers would select and acquire multifamily units in Cleveland and East Cleveland on their behalf. The pitch basically was they had all of the in-house resources from beginning to end, meaning that they would be able to take the victim's money, purchase the property. They would also be the ones that would do all of the construction and rehab of the properties, things that you would normally go to a traditional bank to get funding, and then the funding would be used to do any rehabs that need to be done. You don't have to worry about that. They were able to do all of that in-house. Now, they also claimed that you would get anywhere between 20% to 30% returns on your money within 6 months to a year. Let that sink in for a second. Returns of 20 to 30% within 6 months to a year. Let me take a quick break to explain to all of the new pocket watchers why that is absolutely ridiculous. The reason why that's absolutely ridiculous, because in the legitimate, once again, let me say that, in the legitimate world of investing, if you receive a 10 to 12% annual return on your investment, you are doing extremely well. Extremely well. 10 to 12% annual return is crazy. It's insane. It's great. But that's the traditional investing world, right? We're talking about an index fund like the S&P 500, the top 500 companies in the United States of America. You can try to hope that you're probably going to get between 10 to 12%. Greg Big Business Parker was claiming that he could get you 20 to 30% return on your money in half the time. You should be scratching your head right now and ask yourself, how could that be? How was he able to bring back returns so much higher and better than the traditional market? Well, it's probably because, according to the federal government, it was a fraud. Now, they also claimed that they would be able to handle all of the rehab of the property and the property management, meaning that the investors, all they had to do was hand over tens to hundreds of thousands of dollars to the Parkers and sit back and just get thousands and thousands of dollars a month in return. Sounds like a really good deal. What was the buy-in here? According to the victims, the project down payments ranged anywhere between $20,000 to $100,000. Stop right there. See, you have to understand who the targeted investors were. The targeted investors were not the usual suspects that could afford a $20,000 to $100,000 down payment. If you look through their social media, I can tell you right now, these are not the traditional investors, not the upper to upper middle class of America. He was dealing with your everyday urban profiled on BET / whatever urban type of stuff you want to see, right? His audience, his audience was not what you would expect, that they would have the resources just to dig into their bank account or investment account and hand over $20,000 to $100,000. We're talking about world star hip hop crowd, right? We're talking about the shade room crowd. So where were they getting this money from? Could it be PPP loans? That's a very good guess. And I would probably assume some of them, maybe they got the money from the PPP loans. But according to the federal government, the Parkers encouraged and coached their victims to come up with the down payment money for their investment through maxing out credit cards. I think we've heard that before. If you go back into the Urban Finance podcast, they had many guests who I label fake gurus, teaching people how to fund their business or how to fund their investments by taking out many credit cards, lying on the credit card applications, claiming that they made hundreds of thousands of dollars a year so that they would qualify for multiple credit cards, that they would then liquidate the credit cards by basically using fake invoices of businesses that they really didn't own to charge their own credit card to a merchant account that they now own to liquidate, so-called liquidate the credit cards so that they can then use the money for their business or investments. There's so many things wrong with that whole system, but we're going to try to stay focused on this particular case. All right. Now, the federal government was able to track cashier's checks and wires that were often sent directly to the accounts controlled by Danielle Parker, or through various LLCs that Greg Parker and Danielle controlled. All right. Now, what was the reality, according to the federal government? According to the federal government, instead of renovating multi-family units, some victims received properties that were condemned, uninhabitable. Also, there was an issue with the deeds. Many victims claimed that they never received a deed to the property at all. Others found that their properties had clouded titles. Clouded titles basically mean there's many different claims against that property, making it impossible for them to sell or even fix. Here's the Ponzi pivot. At one point, they were actually trying to buy properties. Now, these was absolutely horrible properties that would never cash flow what they claimed would cash flow, according to the federal government. But at a certain point, they realized that it would be easier for them to simply take the money, live off the money, and then give the older investors some pity payments from new investors' money. According to the federal government, they say that bank records show that the Parkers weren't buying brick and mortar properties anymore. They were using new investor money to pay returns, right? Investment returns to the early investors. Why? To keep them quiet and to help make sure that they had a source of new victims coming into the scheme. Now, they also said that that money was used to support their absolute lavish lifestyle. Now, while victims were struggling to pay their maxed out credit cards, waiting for the investment returns that the Parkers claimed that would come, the Parkers were living lavish, spending $19,000 a month on luxury vehicle leases, spending $23,000 on private jets. Now, how did it collapse? Well, it collapsed the same way that all Ponzi schemes eventually collapse. What ended up happening was the victims started getting a little antsy. They started getting a little squirrely. They wanted their payments because, remember, they maxed out multiple credit cards in order to pay for the investment. And they're not getting the monthly returns that the Parkers claimed that they would get that would cover the credit card payments and support their new lifestyle of being multimillionaires. Remember, these are people who had hopes and ambitions of becoming multi-millionaire real estate investors, the same way that Greg Parker promoted that he was one on the Black financial podcast that promoted him as one, right? So they're thinking when the money comes in, I'll be able to pay the credit cards off, and then I'll be able to live my own personal millionaire lifestyle. But the payments weren't coming. And no, Greg Parker, apparently, according to the government, he had a lot of excuses as to why the payments weren't coming. He blamed third parties who were dropping the ball. He claimed that there was issues with title companies. And then, of course, when COVID hit, here we go. It's COVID. COVID is the reason why I can't give you guys your monthly payments. Everything stopped working. I can't get crews to rehab the property, to then get a tenant in the property, to then collect rent from that tenant, to then pay you. It's not me. It's everyone else's fault. Now, according to the federal government and their internal, right, these are the Parkers' internal spreadsheets and information. As I said before, the Parkers owed over $1 million to just 59 investors. That's a problem. The math shows that you cannot support a Ponzi scheme for very, very long in that type of situation. That is why the FBI Cleveland division claims that they were tracking wire transfers and social media promotions from the Parkers. It's ridiculous. Their lifestyle was absolutely out of control. And of course, it was going to fall in on itself. So what's going on? What's the current news? Well, according to all the paperwork I could find, Greg and his wife were indicted and arrested in New Jersey, and they were released on a $100,000 unsecured bond. But they have strict restrictions, right, on their ability to move around. Also, they have a no contact order to the victims and the co-defendants. Now, apparently, the money has run out. Even though the federal government claims that the Parkers brought in millions and millions of dollars from people who they were able to sucker in to mentorships. Then from mentorships, they became investors into the scheme, maxed out multiple credit cards to get it done. Even though they were able to bring in millions and millions of dollars, I'm thinking the money ran out because, according to the paperwork, both Greg and Danielle Parker have been appointed federal public defenders to handle the case. That most likely means they're going to lose. They are going to lose. When you are going up against the federal government and the people you have defending you are public defenders, and this is no shot at public defenders, it's just a reality. If you don't have a big time lawyer in a 3-piece suit, you done paid them $100,000 retainer to try to work out some great deal for yourself. If you got a federal public defender and you're going up against the U.S. of A., you are most likely going to lose. And if they get convicted, they face significant federal time. Each count of wire fraud carries a maximum of 20 years in prison. And let's not forget the restitution, trying to pay back the victims the millions of dollars. Because here, usually in a Ponzi scheme, when you have people who have invested their life savings, who have invested their retirement accounts, it's horrible enough because that means they're starting from zero. But now you have people who could not afford to invest their savings because they probably didn't have any. They couldn't afford to invest their retirement accounts because, once again, they probably didn't have any. You have people who have maxed out multiple credit cards to invest in your scheme. So even now that the money is gone, the debt is still there. So you've got many people who are probably going to have to file for bankruptcy. Not only have they lost the money, but they still have the debt. So they're probably going to have to file for bankruptcy, and they will never, ever get any of this money back. So listen, pocket watchers, let's be clear. If you are ever approached for some sort of financial mentorship from a person who claims that they used to be a criminal, a person who claims that they used to sell drugs or whatever it is, and then all of a sudden they turned their life around and became a self-made millionaire, and they walk up to you in a suit, do me one favor. Take a look at the wrist of that man. If he still is wearing the brand new tag, the tag on the suit, that's a red flag. Ask to look at that man's pockets. Look at the pockets of the suit. If he hasn't cut open the pockets of the suit, I'm telling you right now, you are 99% likely going into a scam. That's just what it is. Now, let me be clear. If you want to avoid becoming a victim of a scam like this, what you need to do is follow the Pocket Watcher 7 money rules. We're talking about number 1, budgeting. Number 2, emergency savings. Number 3, debt planning. Number 4, insurance planning. Number 5, tax planning. Number 6, wealth planning. And number 7, estate planning. If you follow these 7 simple money rules, you will reach financial freedom. Now, I want to be clear. I did not say you will become a multimillionaire or a billionaire. What I'm telling you is if you follow these 7 rules, you will not live paycheck to paycheck. You will not become a victim of a Ponzi scheme because you have a firm foundation in the actual things that can make you wealthy. You will have a firm foundation in knowing, hey, I'm already doing X amount in the market. I'm doing okay. I'm actually investing in real estate myself. If I want to use 3 to 5% of my overall portfolio and something risky with you, maybe I'll do it. 3 to 5% won't kill your financial dreams, but going all in because you don't have a financial foundation, that's how you end up a victim. You end up a victim because you're swinging for the financial fences, right? You know that your money situation is not right. Let's have a heart to heart just for a second. You know that your financial life is crazy. You do not have an emergency fund. You're living paycheck to paycheck. Maybe you have some debt, and you're looking for a lottery ticket to save you. The lottery ticket comes in many different forms. The lottery ticket comes in a literal lottery ticket that you get from the gas station, but it also comes in the form of a fake guru, of a scammer online who's telling you that they have the secret for you to build unimaginable wealth. All you have to do is go to their webinar. All you have to do is sign up for their free course that turns into a paid course, that turns into one-on-one coaching, that turns into them becoming your personal investment advisor. Then all of a sudden you end up broke. Why? Because you're chasing waterfalls. You're going after things that in your rational mind doesn't make sense. But because you refuse to be disciplined in your financial life, you're looking for a one shot to the moon. I'm going to solve all the bad financial mistakes that I made in the past by investing in this one thing. That's not how life works. So I am telling you, Go to my website, go to pocketwatcher.net. Learn about the Pocket Watcher 7 money rules. Sign up for my free financial planning app. It's not going to do the work for you. It's going to help you do the work you need to be doing to set up your budget. Have a plan for where your money goes before the direct deposit even hits. Have a plan for how you are going to get out of debt. You can do all of that inside of the app. And I have a step-by-step video course inside of the app that shows you how the 7 Pocket Watcher money rules work. Now, if you have a personal finance question, if you have a tax problem with the IRS, if you think you're about to go bankrupt, give me a call. All you have to do is go to pocketwatcher.net, click the free phone consultation button, fill out the form, sign up for a free consultation one-on-one with me, and we will talk about your financial situation, and I'll give you the best recommendations to improve. Now, if there is a celebrity or an influencer who has either been indicted for fraud, who has filed for bankruptcy, right? Or who is dealing with tax evasion from the IRS, put their name down in the comments of this video. And when I get time, I'll do the best I can to get you some content. Thanks for watching.
Are you looking for real financial advice? Thornton Financial is here to help. Certified financial planner Jayson Thornton specializes in tax and wealth planning. Are you living paycheck to paycheck with no retirement plan? Do you need help with the IRS? Book your free consultation with Thornton Financial today. Budgeting, savings, debt management, and retirement. Even tax debt settlements. Get the advice you need to live your best life. Book your free consultation appointment today. Go to www.thornton-financial.com.